In today's market update, we're going to be taking a look at the S&P 500 or SPX and also the NASDAQ or NDX and comparing the recent price action in them. An interesting thing has happened this week, which is that we have witnessed a syncopated beat, if you like, in the cycles between the two instruments. So let's start off by taking a look at the S&P 500, and this is the analysis that we've been looking at for many months that has been developing, of course, over time, with an 18-month cycle trough at least in October of last year, possibly even a greater magnitude cycle trough of 54 months. And here is the 40-week cycle trough that we have been discussing recently. There has been some debate about the position of that 40-week cycle trough. It either formed in the middle of August, or you will know that I have been discussing another analysis which positions the 40-week cycle trough over here in about the middle of July. There is also, of course, the slight possibility that the 40-week cycle trough is coming in late, but this is a low probability possibility in my opinion, although there is an interesting thing to be noted with regard to the comparison between the S&P 500 and the NASDAQ, which we'll look at a little bit later. Given the uncertainty regarding the position of the 40-week cycle trough, how do we proceed? Uncertainty is something that we are constantly faced with when it comes to performing a Hurst cycles analysis, and so it is nothing unusual, and we have very clear ways of dealing with that uncertainty that I've been discussing in fairly recent market update videos. Of course, the first thing that we do is we take a look at the cycle shapes that have elapsed, and the first thing to note here is that these are bearish cycle shapes because they have experienced early peaks and of course lower troughs. And so that provides us with the context that we've been looking at recently. Now let's consider what has happened in the last week or so in the S&P 500. According to this analysis, with the 40-week cycle trough over here in the middle of August, we have been expecting a 40-day cycle trough to form in the markets. I discussed this last week, of course, and there was the possibility that that 40-day cycle trough had occurred in the week before, in the last few days of September. However, last week, price dropped down to a lower low, as you can see, and on Wednesday formed another potential trough for that 40-day cycle. That would make it a very long 40-day cycle. As you can see, if we count the number of bars, there have been 47 bars or 47 days. Remember, of course, that we are always referring to calendar days, not to trading days, because that is one of the fundamental concepts that Hurst discovered when he performed his original research in the 1970s. And so 47 days since the trough in the middle of August makes this a long 40-day cycle. Is it impossibly long? Well, of course, that would require a discussion of what the limits are for the possibilities for the wavelengths of these cycles. Hurst himself never actually defined actual limits, but as a rough rule of thumb, we would consider a cycle that is 1.5 times the nominal average length of that cycle to be too long. That would, in this case, be a length of 51 days. And so at 47 days, it is a long cycle, but not impossibly long. We will confirm that the trough has formed as price crosses up through various FLDs, of course, as I discuss in many of these market update videos, and the FLD that we are watching now is the 20-day cycle FLD, this purple line on the chart, which, as you can see, price has not yet managed to cross. On Friday it reached right up to the level of the FLD, and over the weekend it is still below the FLD. I'm recording this video, as I always do, before the US markets open on Monday morning. And so we would need to see price crossing up above the 20-day FLD to confirm that the magnitude of the trough that it is bouncing out of is of at least 20-day magnitude. Given the analysis on our chart, that would mean that this would be a 40-day cycle trough that has formed. Taking a quick look at the other analysis that we've been discussing recently with the 40-week cycle trough over here in early to mid-July, you can see that there have been 91 days that have elapsed since that trough, and the nest of lows for the trough that we are expecting according to this analysis is for 1 degree greater in magnitude. That's an 80-day cycle trough. Again, this would be a late 80-day cycle trough, but not impossibly late. Here you can see, according to this analysis, price has come up to the level of the 20-day FLD. The 20-day FLD is of course in a slightly different position because of the different analysis. You must remember that the FLD, the future line of demarcation, is a line defined by Hurst that is displaced to the right of price action on the basis of the recent wavelength of the cycle upon which the FLD is calculated. We would need median price to cross over the FLD, which is itself based upon median price. And if we display median price on our chart, you can see that the median price has not yet managed to cross above that FLD, and so we are still waiting for confirmation of a trough having formed of at least 20-day magnitude. But our expectation here is that price should cross above the 20-day FLD and then even above the 40-day FLD. Bear in mind that if the bearishness of the market is increasing, and I have already mentioned that these markets are showing signs of bearishness, and if that bearishness is increasing, then these FLDs might fail to be crossed, and that would lead us to expect further bearishness into the 18-month cycle trough that is expected early next year. But now let's turn our attention to the NASDAQ. This is the analysis that we were looking at in last week's market update. We have a high magnitude cycle trough in October of last year. In this case, it's been phased as a 54-month cycle trough, and we have our 40-week cycle trough over here in the middle of August, as we have seen in the preferred analysis on the S&P 500. And so we have a very similar situation with the NASDAQ, where we were expecting a 40-day cycle trough towards the end of September. Let's zoom in and see what actually happened last week. And here is the very interesting difference between the NASDAQ and the S&P 500. Here we have a 40-day cycle trough actually phased on our chart in the last few days of September. The reason for that is because price came down to a lower level at the end of September than the level to which it dropped last week. And so we have a discrepancy or some divergence between the S&P 500 and the NASDAQ. This is an interesting thing that often happens between these two instruments, and we're going to take a look at one or two other examples. One of the principles that Hurst defined in the 1970s is the principle of commonality, which tells us that markets tend to move with a great deal in common, and what that means in practical terms is that we can use the analysis of one instrument to inform the analysis of other instruments, because of the fact that these cycles tend to form troughs of similar magnitude at about the same time. There is a very interesting relationship, in my opinion, between the cycles that are influencing the price action and the actual price action. It is not an absolutely direct or mathematical relationship. When cycles form troughs or low points, they are influencing price to do the same, and often prices will form troughs at exactly the time that the cycles that are influencing them are also forming those troughs. But there are times when there is some divergence between what I consider to be the pure cycle influence and the actual price action. And this is something that I think is happening at the moment, and the effects of this slightly fuzzy relationship can be seen in the comparison between the S&P 500 and the NASDAQ. And so the NASDAQ has probably formed its 40-day cycle trough in the last few days of September. Price spent last week trying to get up above the 20-day cycle FLD. It really struggled to do that. Another warning about the bearishness in the market at the moment, but it has succeeded in getting above the 20-day FLD, and late on Friday actually achieved the target generated by virtue of price crossing above that FLD. Here again, we would expect price to cross up above the 40-day FLD to confirm that the 40-day cycle trough has formed. However, bear in mind the recent bearishness in the market, and here you can see the fairly bearish cycle shape that formed for that 40-day cycle trough from the middle of August into the end of September, and the next 40-day cycle is expected to be less bullish or more bearish than the previous one if this analysis is correct. But now I would like to discuss this interesting divergence and spend just a little more time discussing the implications of it. I mentioned that we have often seen this divergence between the S&P 500 and the NASDAQ, and so we are going to go back in time. This over here is the beginning of 2009. This is the March 2009 trough, which is widely regarded to be an important cycle trough in the US stock markets and many stock markets around the world. But an interesting thing happened in the NASDAQ. You will notice, let me just remove those marks, you will notice that the lowest price in the NASDAQ actually occurred in November of 2008. The March 2009 trough was a little bit higher. We are looking at a weekly chart here, and of course the cycle degrees are much greater, but I think you will notice an immediate comparison between what happened in the NASDAQ recently and what happened in the S&P 500. That was on a daily chart, and we're looking at a very small cycle compared to the cycle that formed in 2008 or 2009. Let's compare this price action to the S&P 500 at the same time. Here is that same period of time in the S&P 500 or SPX, and here is the low price in November of 2008, and here of course is the lower price in March of 2009. A similar thing was happening between the S&P 500 and the NASDAQ at the time, which is that we were expecting a trough to form, but the S&P 500 gave us another drop lower into a lower trough before finally bouncing out of that trough. When performing an analysis on price action, we position the diamonds below the price lows. And so, of course, in our analysis, we have our 9-year cycle trough below that trough in March of 2009. In the NASDAQ, we would position the diamonds below the November 2008 price trough. The interesting thing, in my opinion, is that the 9-year cycle, the pure cycle influence, if you like, was forming a trough at this point. But the evidence that it left in its wake as it did so differs slightly between the S&P 500 and the NASDAQ. And that is, in my opinion, what has been happening recently on a much smaller scale, of course, with the formation of the current 40-day cycle trough. This relationship between the cycles themselves and the way in which they reflect in the price action makes performing a Hurst cycles analysis a constantly fascinating process. I would like to close this video by pointing something else out that happened in the NASDAQ in October and December of last year. Here is the low price in October of last year, October 2022, which has of course been phased, as I've already mentioned, as a 54-month cycle trough. That was also a trough in the S&P 500 and in many other markets. Interestingly, in the NASDAQ, price came down to a low price that was almost at that level, not quite as low in December of 2022. So there is an interesting discussion to be had about where, in fact, the cycle itself turned. We have evidence that the 54-month cycle trough formed a low point in October of last year, but in the NASDAQ, because of the very similar price levels, it is also possible that that 54-month cycle trough should be placed over here in December. That raises another interesting possibility if we measure the number of days from that trough. In December of last year, measure forward the average length of a 40-week cycle, which is 272 days, you will notice that this raises the possibility that, in fact, the 40-week cycle trough did form towards the end of September in the NASDAQ, and also possibly in other US markets. I raise this point as an interesting suggestion, something for discussion. I am not proposing it as the correct analysis in the NASDAQ. The correct analysis is, in my opinion, the analysis that you see on the chart. In conclusion, I would like to remind you that although we have possibilities in terms of the magnitude of these cycle troughs, there are very clear and straightforward processes for monitoring what is happening in this analysis. And that has to do with keeping an eye on the way in which price is interacting with the very useful Hurst cycle tool, the future line of demarcation, or FLD. And so those are the levels that we are going to be watching as price action unfolds, and as we track price bouncing out of this 40-day cycle trough, keeping an eye on the next 40-day cycle trough, possibly also a trough of the 80-day cycle, which is expected in early November. And here too, in the S&P 500, we're going to watch as price bounces out of this potential 40-day cycle trough. We will watch the way in which it interacts with the 40-day cycle FLD, and again, we are expecting an 80-day cycle trough over here in the beginning of November. I do hope that you found this market update useful and interesting. If you have any questions or have anything to say about some of the ideas that I've brought up, please put them in the comments below this video or join us on our Discord Hurst Cycles server.